Hello traders, Gary Wagner here just before 10:30 in Honolulu, 4:30 in New York on Tuesday, May 17th, 2016, and we are looking at the Dow Jones Industrial Average after a very strong upside move yesterday, a very strong downside move, of course, on Friday. Here on Tuesday, we get another very strong move to the downside, off in triple digits again, off about 180 points at 17,529. S&P 500 also trading lower, also giving back the gains from yesterday, 2044, putting it down about 18 points on the day. Very interesting action in the market in that we are oscillating between tremendous moves to the upside, tremendous moves to the downside, but yet we're staying in the same place. When we look at the value change of equities, for example, over this year, you're looking at the Dow Jones Industrial Average up, but only up by about 0.5%. So when we look at these percent down days today, you can see that we're really working with the entire scope and range in terms of market moves over the last year, almost on a daily basis. Let's take a look at our first Standard & Poor's chart. So the market giveth and the market taketh away. When we take a look at activity that we have seen, it is Tuesday. So when we consider what we have seen on Friday of last week, then again on yesterday's trading activity, Monday, and then today, series of tops roughly in the same area. You've got some real resistance just above 2060, call it 2065. When we look at the open today, that opened at 62, the high of 69, that's right in here. When we look at these series of lows, we definitely see some support at about 2040, but red, green, red. You have alternating candle colors, and we have been talking about the fact that over this last couple of months in trading, although we took one stab right in this area back in April of these record highs, and I thought that we would take and make a stab at 2100, but I had hoped that we would get a sustained stab and actually begin to move through there. And nothing traders could be further from the truth, because what we have seen is a tightening of range in a highly consolidating market in terms of defining itself. We talked about the fact that when we look at trade activity going back 2 weeks or 3 weeks, we get this series of alternating candle color. You go green, red, red, green, red, green, red. You get two greens here, two dojis here, and then we pointed out that in terms of longevity, the longest rally we've seen is these 3 consecutive days here. We did get 3 consecutive days, although the center candle is a very difficult candle to call green, but it is an uptick. You can see that that's not a red candle in there. So we've had rallies that have sustained 3 days as a maximum time point, but other than that, we haven't really seen this market do much except trade within this defined range. Now, the same cannot be said for crude oil. Crude oil continues to rise dramatically, up over 1.5% today, almost $1 per barrel gain, 80 cents to be exact. 48.52, high 48.60. So you can see the market closed or is still trading in after markets, but right off of that high on the day. Now we're looking at a monthly chart. On this monthly chart, of course, it's not something to trade with, but over the last 4 months, as we pointed out yesterday, we have seen crude oil go from 26 to past $46 per barrel, almost a doubling of price from the beginning of this year's lows to the current price that we're at, in an extremely exceptional move. There are some supply concerns. Where are we going to fight headwinds? We talked about yesterday that 48 would be a potential point that we look at, and it's just based upon these lows. But this right now is a very fundamentally driven marketplace rather than a technically driven marketplace. We could see higher prices, but let's see how crude oil prices react at this price point. And then traders, lastly, I do want to look at crude oil as we compare it to recent activity in the equities markets. Crude oil on the top, equities vis-a-vis the E-mini S&P on the bottom. We can absolutely see a basic level in which we found some real headwinds at 2080 in the S&P and a decline from that point to around 2040. At the same time, if we just look straight up, that's when we saw really oil find a little bit of support at about 43 and is now trading above 48. So over this last, call it 5-6 trading days, we have had a dramatic rise in oil and a substantial fall in equities. In other words, what we're looking at is either a decoupling of the relationship between crude oil and the Standard & Poor's, or at best, or the most, a negative correlation between the two, but they're certainly not moving in tandem anymore. Maintain your current long position in gold, maintain your current stop. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another Trending Markets. Bye-bye.